Don't make me throw things at you. All right, so worksheet. A worksheet is a non-permanent financial statement, meaning the only reason we make one is it's so we make sure that all of our numbers are good. Now, if I were to use an accounting software like QuickBooks, QuickBooks would never need to go through and make a worksheet. Reason being is QuickBooks never makes mistakes in posting. QuickBooks never makes a mistake in math. Okay, the mistakes that happen in QuickBooks is when the person puts it into the wrong account. Bless you. But it's never the software. It's people using the software incorrectly. Okay, because we're going through and learning how to do it manually, meaning we have to post and we have to do the math, we have to double check that we've done all of our work correctly. That double checking is our worksheet. Okay. We have 4 separate columns on our worksheet. There's actually more numbers for there, but we have trial balance. Okay? Today, we're going to be focusing in on the trial balance and the adjustments that we did before. Okay? The next thing we do after you do your trial balance is you must remember this is the biggest part about a worksheet. If your trial balance does not equal, do not do anything else. Stop and fix it. You have to do it. Because otherwise you'll do other parts and then you'll make a change here and you have to keep erasing and then you won't remember where you've made changes. That is my biggest tip for you. Now here's the other thing. There are lots of businesses that go through, every business has to do accounting. But there are not very many businesses that do accounting like how we're learning it. I know, like Mrs. Grassel, then why are you teaching us that way? That would have been my question. Okay. The reason that I teach you how to do this is it shows you, and we've been practicing, how accounts work and how things go together. If I were just to teach you the software without teaching you how accounts work, what an accounting equation is, what posting does, you would just say, well, if I journalize, if I write a check, then it automatically goes into debit, it goes into advertising expense. You really wouldn't understand how those pieces go together, why a ledger is important, and why we go there. There are going to be very few people in their career that would do journalizing like what we're doing. They're not going to get a piece of paper out. They're going to have some type of accounting system, accounting software that's going to go through and be used, and it's going to do it for them. Okay? Now, one of the things that I do frequently with the Thunder Zone is I would ask Ben, I'd say, okay, Ben, I said, run me a trial balance. Okay? A trial balance is just on a specific day, it gives me the balances of all my accounts. It is always going to equal. QuickBooks can't do anything where it doesn't equal. It won't let you give you a credit for $35 and a debit for $700. It won't let you. It will stop you, and you have to figure it out. We look at our trial balance at any given point because then I can go through and see if something is funky. Because you can go into QuickBooks and I could debit accounts payable $10,000. And there was no balance there. And then all of a sudden you have a liability with the debit balance. And if you don't understand how accounts work, you'd look at that and be like, it's fine, that's what the software did. But you should be able to look at it and say, accounts payable should not have a debit balance. My expense should not have a credit balance. My assets should not be a credit balance. And by what we've done so far in class, you get that concept of this is how it should be and how it should go there. Now, accountants, again, day in and day out, do not do what we are doing in class. This is the basis for them to go through and advise people, because what we're doing in class allows businesses to keep track of their records and find out where they're running and how they're doing. Typically, if somebody did this type of work daily, they would be considered a bookkeeper. A bookkeeper then keeps the books of what's going on with the money, and then an accountant would come back in and then give them suggestions on what they can do differently. So when we talk about what you can do with things that you've learned in accounting, if you went to Fox Valley Tech, you could go ahead and get a 2-year accounting degree. And then you could go work for various accounting firms in some of their data entry areas. Okay, so you could go there, if this is something you like, you can get a 2-year degree, and then you can get hired by different businesses to do bookkeeping, that type of work. You can't be an accountant until when? So you have to go to a 4-year, and you have to do 5 years. It's a requirement. Okay, you have to have more credits with an accounting degree to graduate than you do with, for example, an English degree. In order for you to sit for the CPA exam, and the CPA exam is an exam that you take that goes through and certifies that say you know how to do accounting. And there are 4 sections. Here's me, I'm looking at Logan because he did some little research for me on that. There's 4 sections that you need to take in order to pass the CPA exam. You don't sit down and do them all at once. So you'd study for one part of the exam, sit and take it, and if you pass, then you would then, start studying for the next portion of it. So that's how you become a CPA, or Certified Public Accountant. Now, I can graduate with my accounting degree and not take the CPA exam. Okay? I could then go work for a private company, and I can be the accountant for that private company. Okay? What does it mean to be a private accountant versus a public accountant? Yes, so just for one business. So, for example, I could get hired by the Packers if I have an accounting degree, and I didn't sit for the CPA exam. I could get hired by the Packers, and I could be the Packers accountant and do all the money. They have one. They have a big billing and finance department. Someone's got to pay all those players. You have to do all the revenue for everything that comes in. So when you think about sports as an industry as a whole, there's lots of employment in there. Even the timber rattlers. They have an accountant that's on board that they have to go through, okay? So they would just work for that one company. Now, a public accountant would work at a CPA firm, and they would work with lots of different companies, okay? A couple of my students that have graduated with their accounting degree have sat and gotten the CPA exam. They've worked in public, and then when you work in public, then you figure out what role or what area you like the most. And they work there, and then after a while they might decide to leave public and go into private. But then it gives you a broader exposure of what you're going to do. Now, most people, when you become an accountant, you're going to be really busy during tax time, supply and demand, right? Everyone needs to have their taxes done from January 31st when you get your statement from your employer, and it has to be done by April 15th. That's crunch time. And when I have toured CPA firms, they go through and talk about what perks they give their accountants during that they call it busy season. For example, they will go through and they will cater in meals 2 nights a week. They will have snacks brought in on certain days that you don't have to pay for. They just realize this is a stressful time for their employees, and they're trying to make it better. People are going to have to work mandatory overtime during busy season, because that's when the work is. You can't just say, oh, we'll just wait and do it later, because you can't, because it puts their clients at risk. Then what happens during the summertime, they kind of bank those overtime hours, and they don't have to work as many hours in the summer. So then maybe in the summer they only have to work 10 or 20 hours a week. How does that sound? All right with some people? It just depends on when you like to work. For me, it would be a little bit hard, because then I would never be able to snowmobile. Because you work the whole time. But then, very similar to me, I don't have to work much in the summertime. So accountants have different roles. So when you think about what we're doing, you have learned a whole bunch in this class. Because when you walked in on the first day, if I would have shown you this, that would not have made any sense. You didn't know what a debit was. You didn't know what a credit was. You didn't know the accounting equation. You didn't understand assets versus liabilities, owner's equity, and going through. So you've learned a lot. Whether or not you have great skills in all the different aspects of accounting, you've learned a ton. I've had a great time with you guys this year, too. How about you guys? Yep. I try to balance it out between how much various homework you get. I try to listen to you if you lots of things are going on. Obviously, when we took the last test, we hit the struggle bus a little bit on that one. So what did we do for that? I gave you guys some extra credit to go ahead and show me that you have a little bit more better skill set that sometimes it doesn't come across on that test. So again, we're going to be wrapping up Chapter 14 with seniors. That'll be your last chapter. And then underclassmen, we're going to do Chapter 15 as well. So, trial balance proves debits and credits. Adjustments, what do they do? Adjust what? Why? Well, stuff gets used up. Anytime I buy a supply, so I go to this office supply store and I buy a box of paper. The following month, I go to the office supply store and buy another box of paper. At the end, do I have 12 boxes of paper? No. So supplies gets used up. Insurance gets used up. Okay? We have additional adjustments that we're going to learn. What is the purpose of our income statement? I'll give you a hint. The very first word. Your income statement is going to tell you whether or not you've made a profit or loss, right? So, your cost accounts, your purchases accounts, your revenue and your expenses are going to go into here. Balance sheet does what? What is its purpose? What equals? Accounting equation. Remember, the accounting equation must always be in balance. Okay, so every one of these columns has a purpose. And you go through and get them done in a specific order. Step number 1 is, remember, trial balance does not equal, stop right there and fix it. Do nothing. Should we do that? Let's rock and roll. Roll and ride. Okay. A partially completed worksheet for coastal aquatics is given below. 4 general ledger accounts are shown. Your instructor will guide you through the following examples. Enter the account and count balances on the following lines. Line number 3, accounts receivable. What type of account is that? That is not a type of account. Asset. Thank you. No. So accounts receivable is an asset. What is the normal balance of an asset? Debit. So we got to put $15,485.25 as a debit. Then accounts payable. What type of account is it? Liability. Anything that ends with the word payable is a liability. Oh, I got to put the account title too, don't I? Whoop. On line 13, I'm going to put accounts payable. And I'm going to put it in as a credit of $18,482.28. Sales, classification. Yes, revenue. Okay. He's on it today. Revenue has what for normal balance, debit or credit? I don't know, because I did a typo. No space. That was throwing me off. Thank you. So sales. Sales has a credit normal balance of $845, $828.09. And the last one we have is purchases. Classification. This one's a hard one. Nope. 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 It's not an asset. It's not an expense because it doesn't have the word expense in it. It's not stockholders' equity. It's not a liability because it doesn't have payable in it. There is another one, okay? We have sales is our revenue account. Purchases is a cost account, okay? So cost accounts we did not have in our first unit because we had a service business. Now because we're buying and selling goods, we have to have purchases. So purchases is a cost account, and a cost account has a debit normal balance. So we're going to put $389,184.01. Now, add them up. Get a calculator out. Add it up, add it up, add them up, Macy. Nope, not going to do it. No, I know. It's my fun torture for a Friday.